Welcome to Access a Trader, the #1 community for high-level traders to learn valuable trends and strategies, connect with other top traders, and become consistently profitable. Click the link in the description of this video to receive a special offer on our revolutionary PS60 training, access to our daily chat room filled with experienced traders, and so much more. Space is limited, so make sure you don't miss out. We look forward to seeing you in the room.
Hey everybody, good morning everybody, and welcome to another edition of the AccessATrader.com weekend update show. Welcome all our friends who are joining us via StockTwits, Twitter, Facebook, and obviously YouTube. Hope everybody is having a great weekend. Hopefully everybody did well trading this week. Crazy week, right? Crazy week. Let's kind of backtest a little bit, talk about the month of October, right? Very aggressive month. Again, if you've been kind of following me on just on the YouTube platform, you kind of see the videos just from the last month, how again we went from this double top, right? Double top on the NASDAQ 100 to closing below the 200-day moving average. We talked about the ramifications of that. And then last week's video, we talked about finding your edge in a bear market, right? Finding an edge in a bear market. And when people heard the word bear, it's like life stopped. Again, here's the question, right? If the market goes up 10%, right? Why is it called the bull market? When the market comes down 10% off those highs, it's called a correction. Matter of fact, the President of the United States called it a pause, right? Called it a pause. And I think, you know, people are so sensitive into labels, okay? That they don't see what's in front of them, okay? I've said this for years. The indexes mean absolutely nothing, okay? Whether the market goes up 500 points or goes down 500 points, you're not getting an extra bonus check, right? You're not getting an extra dividend in your account because the market went up 500 points, and you don't lose extra money if you don't have any exposure while your portfolio is not there when the market's going down. So the indexes are just water cooler talk, okay? That's all it is. They haven't meant anything in a very long time. It is just an area of a good concentration conversation piece between people, and investors are gauging their performance of their fund managers. That's all it is. Again, for us, we trade ranges. Okay, we trade ranges. We don't care if the market's up, down, as long as there are ranges that are expanding. We're going to be fine because we trade the most aggressive stocks in the market, the Amazons, the Teslas, the Netflixes, so forth and so on. But it's just really amazing how sensitive people are. And, you know, since I made that first video talking about the double top on the NASDAQ 100, especially that confirmation video that we talked about, well, now we're underneath the 200-day moving average. We're going to go lower. And again, don't call it a bear market, right? Don't call it a bear market. It's a back test. It's a correction. It's a pause. Don't call it a bear market. Equity prices are depleting faster than you can blink, right? And stocks are getting rejected at supply, but don't call it a bear market. Don't do it. Just don't do it. It's like, again, I talked about it in the live webinar last weekend. I was sitting in my son's basketball game. They were down 14-1. And the parent next to me was saying, "You guys are doing great. You guys are doing fantastic. Keep it up. You guys are doing fantastic." I turned to him, I go, "It's 14-1. What are you smoking?" Okay. Again, eighth place ribbons are ridiculous. Guys, we're either in a good market or in a bear market. We're either buying pressure in equities or this equities are selling off. We don't care about the scoreboard where it's going to be 10 years from now. Okay, we're not winning the war. We're looking to win intervals. Okay, so if the market closes below the 200-day moving average, again, we say this in every single video, it's collecting data. We know this is a bearish scenario. It's not a bullish scenario, it's a bearish scenario. And when stock prices keep on depleting every single day, and you have 3-minute rallies getting rejected at supplies and then go down in dollars, that's called the bear interval. Again, whether you're sensitive enough to understand that or to embrace that, that's exactly where it is. And the one thing in bear cycles, okay, bear cycles, and again, I don't want to call it a bear market, it's a bear cycle. The one thing we've seen in the most aggressive bear cycles, okay, is intense buying pressure, okay? And there's going to be intense buying pressure because the market structure is damaged. You're going to have less participants. So for example, this week we saw the indexes pretty much rise about 2.5% all across the board, right? 2.5% all across the board, because the lack of market participants made it easier for equity prices to finally move. The same way the market process, right? The market participant structure was much lower in the 3 weeks when the market went down. There wasn't enough right? There wasn't enough activity. There wasn't enough buying pressure or support for the market to support the structure on the way down. So you're going to have bigger moves. You're going to have wider spreads. You're going to have thinner liquidity, and you're going to see much bigger moves in the indexes. So on paper, right? On paper, we did see pretty good activity. NASDAQ up 2.7%. You had the S&P up nearly 2.5% for the week. That's a big deal, right? That's a big deal, but it doesn't take away from where we still are, right? And it doesn't take it away because, again, at the end of the day, it's not about our opinion. It's not about what we want to see happen. Again, in the perfect world, okay, even though I'm not a bull, I'm not a bear, I'm an opportunist, I still like trading in a bull market, right? There's something about market structure, more liquidity, more active market participants that's going to drive prices. And again, let's be honest, everybody feels better in a bull market. Did you feel better or worse last week when the market was selling nonstop? Did you feel better or worse this week when you had a really big rise and a lot of really strong, aggressive dead cat bounces, right? It's a pretty easy formula. You always feel better. Life is better. People are better. People are better looking. Food tastes better. You're taller. You're more handsome. You're more attractive, right? Life is better when the market goes up, right? So in a way, I always want to trade in a bull market, but at the end of the day, it doesn't really make a difference. Pretty good week. I mean, pretty good week. You had a lot of market bounces, individual names that got really, really destroyed. The NASDAQ 100 just in the last month has, gone basically from 187 to 162. I mean, it's a pretty big move. 25 points on the QQQs is a pretty good point. And the one thing that I always know, no matter how bad, bad is a relative term, but how bad the market performance is, you could always find value. Even if you are a perma bull, you'll always have some really aggressive bounces, maybe several day trading opportunities, even in the worst markets. And that's what we saw. That's exactly what we saw. We had an incredibly oversold bounce, and it lasted for about 3 days. And we came into Friday, right? We came into Friday. Ultimately, especially on beta, that's kind of my sweet spot. We saw a pretty dismal response to earnings for the whole week. And Friday was I don't want to call it a do or die, but kind of the jumping point what we could expect going into next week. So you had Apple, right? You had Apple, and you had this new wave of, how they're going to be reporting their accounting and blah, 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 blah. And the market didn't like the news, right? The market didn't really like the news. And they sold off Apple, right? Sold off Apple. This is a pretty big decline, and you can see here, Apple closed right below this line here, which is the 100-day EMA. So you can see the technical damage forming, but what the market really spoke loudest was what the QQQs couldn't accomplish. And the one thing we talked about on Thursday's session into Friday, we want to see how the market, right, with the market structure, we want to see how speculation money is going to live with prosperity. Because again, at the end of the day, we did have this big bounce, and the Qs, right, they reclaimed this supply zone. And why was this supply zone important? If you look back, right, for the last, let's just say several weeks, right, it was trading, you follow this burgundy line, everything was trading underneath, right? Underneath, right? We going back a long way. So the market structure, right? They just couldn't reclaim for weeks and weeks and weeks this burgundy line. This is the top of supply, okay? This is the top of supply. So finally on Thursday, we reclaimed it, okay? Which was incredibly bullish. We had some incredibly big moves in Amazon and Netflix. And if you've been following, especially in the Twitter feed or my just general Twitter account of StockTwits, whatever the case may be, you see pivot after pivot after pivot of really big instructional levels that really took off, right? So everything is good. So going into Friday's session, it was really important. We try to really find as many clues as possible to what's about to happen next. So we had weeks and weeks and weeks that we were trading underneath the supply, and then finally we reclaimed it, right? We finally reclaimed the 71.25 area. And we talked about on Friday's video, okay, how important it was going to be that the bulls really embrace this Apple news and they don't take the market down. Because if they did, if we fell back below this channel here and we lose the 71.25 that was supply and now becomes support, if we lose that area, it's going to kind of set the tone for this week that's coming up. And, for a while, the market held up, we gapped up, everything was holding. And then, as you can see, it's plain daylight, right? Plain daylight. You can see how the market, the QQQs, they lost to 71.25. They lost to 71.25, and we closed right back into this channel. So we're kind of an important area, okay? If you're a bull, you can't like this as good news. Now, again, you could turn around and say, well, we just had a big run, and now we're just digesting this big run. But again, I don't speak in fantasy, okay? I don't live in fantasy island. I look at data, okay? I look at data, and the data is going to confirm to me one way or another which way we're going next. So if you look at the daily charts in the NASDAQ 100, right? So we have this dead cat bounce from the bottom Bollinger Band, again, supply to supply and demand to demand. So if you see where we got rejected, right? If you see where we got rejected on the macro candle, we got rejected right off the 200-day moving average, right? Everybody see that? We got rejected right off the 200-day moving average, and we went lower. The good news is, okay, we held the 5-day moving average. And why is the 5-day moving average important? At least for me, it represents short-term sentiment. So going into next week, right, going into Monday, you don't need to guess, okay? There's absolutely no reason to guess. If you are a perma bull, you got to take off your blinders. If you're a perma bear, you got to take off your blinders. You got to look at the data and make your battle plan, your course of action based on, right, the data. So here's what we're looking at. Here's kind of the line in the sand for both bull and both bear. If the bulls, right, can reclaim 72.55, right, this area right here, it's not, it's not opinions, guys. These are technical analysis facts. Either the bulls reclaim 72.55 and then we go higher, or if the bears reclaim the 5-day moving average, and again, the 5-day moving average represents for me sentiment, right? It's short-term sentiment. And if the bears reclaim this 68 level on a close on the NASDAQ 100, we're going lower. Again, there's no room for interpretation. 72.55 close higher, with 168 breakdown, we're going lower. And if you look at the 60-minute channel, it will show you exactly the same thing. The bottom of the channel on the QQQs is 168.09. So if we close below that 168 level, we're going to go lower. Okay, so all you guys who especially are trading on the option side, get your ducks in a row. Those are the levels. Okay, there's no reason to overthink. Those are the levels. Everything in between means absolutely nothing. We can have range opportunities to trade from. But if you're looking at the macro channel, those are the two levels we're going to be looking at. So a pretty good week. By Friday, I was just exhausted. I mean, really, really exhausted. For all you guys who are in the live webinar, you kind of know what I do, man. I trade all week. I share my screen. I show all my executions, all that good stuff, right? I speak 7 hours a day, literally 7 hours a day, answering 1,000 questions a day. I record these videos. It takes a lot out of me, right? So by the time Friday rolls around, it's almost like I always tell every single trader, you need kind of a decompression day, right? You kind of need to kind of reset and kind of focus, because if you burn out, I don't care how good of a run you're on, if you're a burnout, if you're going to burn out your mental equity, you're not going to function properly. So I always tell traders, especially new traders, you don't need to go on a bad run to kind of take a step back. I try Fridays especially to kind of trade less, okay? And ironically, since May, we've been having some incredible action on Friday. So I always go into Friday with the intention of having a mental rest day, and I always wind up trading. And Friday was like no difference. Friday, I expected to kind of have my activity being a little bit lower because I was just mentally exhausted. But there was value. There was absolute value in the day, and there wasn't many pivots, okay? There just wasn't one of those days you had 8 to 10 to 12 pivots. It wasn't that type of day. We actually saw a lot of really small contracting channels on Friday. But again, as I say all the time, it's not how many trades you take, it's how many trades you take properly. So Friday session, I think we had like 4 or 5 pivots. I only took 2 of them. Okay, I was just like by mid morning, I was just like I had no interest anymore. The channels were going sideways. Like Amazon was trading like in a $2 spread for like 3 hours. It was just like the market was kind of dead. Like after like the first like hour, the market really died out to like 2 o'clock. I mean, there was really nothing going on. And those are the days you kind of really want to take a step back, kind of readjust. You don't want to squeeze water out of a rock. It's just so important to kind of be a better friend to yourself. Again, there's nothing wrong even taking the day off, getting a massage, going swimming, sauna if you live in a warm area, obviously go to the beach. Be a better friend to yourself. You really need to stay in the game mentally to really, put yourself in a position to win. So here's Friday's session. Again, not many. You didn't see many pivots here. I took the first 2 of the day. I just wanted to trade for some cash flow, and then everything else I just didn't care about. So I took Apple, 211.30. It needs to build. It was right after the open, okay, right after the open here. And why was 211.30 an important area? So here was Apple, okay, here was Apple, and let's just get rid of all this. So here was Apple here. This candle high was 211.20, and this high right here is 211.30. So we just needed a build above this 211.30, and you can see here it went from literally from 211.30 to 213.65, probably in about 15 minutes. Okay, you can see where it got rejected. Here is a pretty big move. I scalped 2/3 of my position, decent cash flow, and then I got stopped out of my runner. Which again, you always need to use break even as your stop. Again, here's kind of where you do your job. There's a kind of three-part process into it. Okay, you identify the pivot, right? Check. Once you get cash flow in the pivot, right, you got to take some off. You got to pay yourself. You always want to put yourself in a position that you are paying yourself on the way up or on the way down, depending on what you're trading. And your last piece of the puzzle is you have a runner. Okay. Your job is to either see that runner go into supply, okay, or your job is to use break even on that last piece. Whether you get stopped at break even on the last piece, that's fine. You did your job. You held your runner, right? You held your runner, or you got stopped out. Either way, you did your job. So it was very, very important to kind of use that process, because a lot of traders always ask me, well, how do I scale out? I always scale out in thirds. Depending what I'm trading, if it's Amazon, I'll try to scale out thirds like every $5 up, right? And just try to keep a runner for the biggest move up. If it's like Tesla, I'll try to scale out every thirds, every $1 up. It all depends what you trade. If it's like Apple, yeah, you want to scale out every like 40, 50 cents. The reason why Apple is different is there's tons of liquidity. So you're putting on more size, so you don't need that big, you don't need that monster move. Like if you're trading Netflix, yeah, you want to scale out every, $1 or so. But every trade is different. Every stock is different. So what I try to tell, especially new traders, scale out in thirds, right? Depending on what you're trading, scale out in thirds, and always leave that runner on and use break even as your stop. And you try to go rinse, repeat, rinse, repeat, rinse, repeat. So Apple was fine. Apple was fine. And then we had NVIDIA, right? Then we had NVIDIA. This was my second trade of the day. This was my second and last trade of the day. By then I was already tired. So 215.50 build. If it builds below, it could flush. Here is NVIDIA. Here is NVIDIA right over here. Here's the 60-minute channel on NVIDIA. The low of this candle right over here was 215.50. As you can see, it started building below that 215.50 and it flushed down to 13.40. Again, not a bad move at all. Absolutely nothing wrong with the move, so I was fine. The greatest thing about these pivots, and this is where I always tell new traders, again, unfortunately, social media with all these alert services and anyway, whatever, they've really cemented into your head that if the group leader is not in the trade, right? No, I can't be in the trade. If he's not in the trade, I'm not in the trade. The greatest about these things, about these pivots are they're organic. There's millions of shares traded in these things. These are organic vehicles that hedge funds are trading, their pension funds are trading, their retail is trading, prop guys are trading, we're trading. It's an organic order flow. When buyers clean up sellers, right? stock goes higher. When sellers clean the buyers, the stock goes lower. You don't need anybody in these trades with you holding your hand. It's just a fact. So whether I'm in this trade with you or I'm not in this trade with you, it's either going to go or it's not going to go. So I took the first 2 trades of the day and I was pretty much done. And here's, we just had a couple of more builds here. I didn't take this trade. As you can see, it literally traded at the same time. NVIDIA 1005, Baidu at 1004. I didn't take Baidu. I took NVIDIA, just more liquidity in the video. But again, it doesn't make a difference who's in these trades. 199 if it builds below can flush. Here is the Baidu chart. Here is the Baidu chart right over here. So your first move was right over here, 199, right? Oh, excuse me, it was right over here. The first move into supply, rising support was 199. Once it built below this 199, look at the move. Again, does it make a difference who's in the trade with you? It went from 199 all the way down to 193. So big move here. And this is where, this is when I really logged off. This is where I logged off. There was actually a pivot here. I didn't take this pivot. I was already done for the day, done for the week. But again, it doesn't make a difference who's in these trades. And I said Tesla, this is at 130. 246 is a big area. It needs to build. Why was 346 a big area in Tesla, right? You can see it right here. Let me just make this a little smaller so you can see it. Where are we? Okay, so Tesla. All right, so you got Tesla right over here. The top of this channel here was 345.51, right? So it needed to reclaim, so I just used the whole number. And I said if this thing could reclaim 346, you should get a spike, and it reclaimed 346 and went to 48.5. Again, not every single trade needs to be up $10, $12. Sometimes cash flow is just cash flow. So the moral of the story is, again, if you want to be a professional trader, you have to stop with the, this whole social media mentality. 12,000 people need to be in the trade with you. You have to wait to somebody to give you an alert. Again, look, yeah, if you're trading a $2 stock and it's going to go 4 cents, then yes, you need 1,000 people to move that stock. If not, if you're trading Amazon, if you're trading Tesla, Netflix, Apple, SPYs, Qs, you don't need anybody. Okay, you don't need anybody. All you need to do is trust technical analysis. So we're kind of set up for next week, guys. We're kind of set up for the week ahead. Again, the prices that we should be watching if you're a macro player on the NASDAQ 100 is the Qs, right? You look at the Qs, and the top of this channel here, again, is the 7250s. The bottom of this channel here is the 68 level, and everything in between, you could scalp both ranges on the side. So guys, have an awesome week. For all you guys who are joining us in the live webinar, this email will be going out probably either later tonight or tomorrow. You have the full actionable trading list in front of you. You have the full options report. You have the webinar recordings. You can see everything that we've done throughout the day. And it's pretty cool, man. It's pretty cool. If you guys do trade beta and you're kind of just stuck in that rough spot that you can't really get going, this could be the edge you're looking for. Again, nobody trades this with us. I promise you, you can find any content you want on YouTube about anything, okay? But you will never find the specific details about what we do with these pivots. Guys, God bless. I hope everybody has a wonderful day. Hope you're enjoying your life. Hope God blesses you and your family. And with God's help, I'll see you all on Monday. Take care, guys.